Welcome in to Trucker Talk Radio. You're on Behind the Wheelhouse with J and J. I'm John. This is Justin. Today's guest has become one of the strongest voices in the country, explaining the intersection of intermodal, trucking, market cycles, and freight strategy. Rick LaGore is the co-founder and the CEO of InTek Intermodal Logistics. He looks at freight the way a CFO looks at a balance sheet, and that shows up in everything he writes. He's a frequent contributor to industry publications. He's quoted regularly on freight market direction, and his LinkedIn analysis has become required reading for a lot of people inside our space. Rick, welcome to the show. We appreciate you coming on.
Thanks for having me. And that's a great introduction. I said, who is that person? Oh, you're talking about me. That sounded super awesome. I didn't know that.
You've done a lot of stuff. You've done a lot of stuff.
Well, the white hair says I've been around for a long time.
Well, at least you have hair. So.
Yeah, exactly.
We don't want to.
Oh, sorry about that.
Yeah, we don't even get no. We'd take a few grays, not a problem.
That's right. But you're an Ohio State grad, MBA from Ball State, then General Motors as a financial analyst back in 1989. That's not the typical entry point into freight. Walk us through how you ended up in transportation and logistics.
Well, life always throws you a few curves, and as I spend a lot of time with we've got five kids, but I've also spent a lot of time with young people, whether it's at Ball State or Ohio State. Right now, I sit on the advisory board. I always tell people, you get your degree, but you just don't know where life's going to take you. And 37 years later, it definitely changed around a bit. I thought growing up in the 80s, big time finance, Wall Street, the movie, all that stuff. I thought that was going to be my life. I found that I was going to be in Indianapolis much longer than what I anticipated. Really, I thought I was going to be moving up the ranks within General Motors, and that just didn't work out the way I was expecting. And because of that, I was looking around back in late 80s, early 90s, trying to determine, okay, if I'm not going to be this big time finance career, what can I do? And back then, I was looking around and I said, well, you know what? FedEx is here, so this town is probably going to turn into a logistics town. At the time, it really wasn't. I mean, Indianapolis.
Good call.
Indianapolis, Indiana, you think of the crossroads of America. I mean, that's the slogan for Indiana. And I made a good call and decided that I was going to go into logistics. Now, the challenge was, how do you get from being a financial analyst and big time finance person to then go ahead and move into logistics? And I had a great boss. She took a real interest in me, and she gave me an opportunity to gradually move myself in from essentially being a consultant for the back end business at McMillan to eventually moving up to a place managing warehousing, managing call center, managing freight. And I followed her over to BrightPoint, which eventually moved over to Ingram Micro. And when she moved on, I took over the North American operations. And that's when I really got transitioned full time into logistics. And while I was there, the way I got into the freight is more and more conversations that we were having with our customers. I could tell them as I'm sitting at the table, I could tell them we could save you more money in your freight in 1 month than what you spend in your warehousing with us for the entire year.
Yeah, you came into freight through accounting and finance rather than the traditional, like a lot of our listeners who are in the business, the traditional brokerage and sales track like Justin and I did. How does that shape the way you look at the industry differently than most people who are sitting across the table from you?
It shapes it differently in that I was a buyer of freight before I was a seller of freight. And so I tend to not be too salesy. I tend to be more solutions oriented. Our company is more solutions oriented. And a lot of times we just say, we're just not a good fit for you. And we're not afraid to walk away from business because we think there's an endless opportunities. And so coming from that direction versus coming from a sales direction that I have to make a sale, I need to do this, I need to do that. And in a lot of cases, it moves you further up in the organization in terms of the folks that you're talking with. A lot of folks are a little concerned when they have to sit in front of a CFO and say, hey, these are the numbers and this is what it means to your company. And okay, freight is more than line haul and fuel. If things don't work out right, particularly in intermodal, which is where we spend our business, we spend our 95% of our time. If things don't work out right, you're going to get hammered with accessorial charges, and that just doesn't work out real well. And then also we talk about the total cost of of business for them. So what's your carrying cost in the inventory? We just cover a lot of different things versus here's a lane A to B, here's your line haul plus fuel.
You make a good point there about the fees and stuff in intermodal. It's I've dabbled in it over the years, and they can run up so fast you never realize the bill until it gets there. And I've had a couple deals go south because of that. So you come from the financial sector, you move to freight, intermodal on top of that. Which one's more stressful?
Oh, they're very stressful. I would say that the freight side tends to be a little bit more stressful. There's always something that goes wrong with freight, and it's how you deal with it and trying to be on the front end of it. And freight is always moving. At least the financial markets, there is a stop at some point so that you can kind of close down a little bit. But freight, having managed warehousing and transportation, the warehousing guys don't really get it because when the dock doors close, it's done and they get to go to sleep. Well, that's when the problems typically happen because now the freight's in the road and things are going to need to be, tracked, traced, and managed, recovered, and particularly in intermodal where you've got per diem charges, chassis charges, storage charges. If you're not managing that and paying attention to that for your customers, you're not going to have that customer for very long. So there's a lot of moving parts, even on the intermodal side. I mean, you got 3 different segments that you're managing: your origin dray, your line haul with your rail, and your destination dray. So there's a lot of things that could happen well, but there's a lot of things that can go south.
I want to talk about, I want to step back for a second because you said you had 5 kids and I have 6 kids. And there are a lot of guys that are, new family guys or, that are listening to this show. They're coming up in the ranks in logistics and they want what you have. They want to be a CEO of a company. They want to grow their family. Talk to these young professionals, in their late 20s, early 30s, trying to make themselves known and help get themselves, climb the ladder and also grow a family at the same time. Talk about that work-life balance a lot because having 5 kids, I mean, like I have 6, Justin's a single dad. It's a lot. And so talk about how you manage that.
It's a ton. You do have to make your family a priority. I would say for that to happen though, you got to have a great partner. If you don't have a great partner helping you raise the kids and having the exact same goals that you have in terms of being successful outside the home and inside the home, it falls flat, and it falls flat pretty hard. That's the keystone of making it all work. And from that point forward, then it's, you need to be able to figure out how you're going to be engaging with your kids as much as possible while also taking care of your team back at the office. How I was able to do that, I did a lot of coaching baseball, coaching basketball for them. That helped make sure that I was constantly engaged, but you also have to make sure that you made time. I mean, as soon as I came home, dinner together as a family, get them ready for bed, do the bath, all that kind of thing. And then after that, then jump back on the computer and you're going to go at it. And you're, 11:30 at night, you're still going to be working. Get up early. I'm a guy that likes to run or in the morning or work out in the morning. Okay, well, I'm getting up at that time. Granted, all my kids are out of the house now. So I like to say that all my kids are off the payroll. But back then I would get up at, 4:15 and I would go work out, go take a run. And I would do the things while they're sleeping. They didn't really have an idea of those things that were happening.
Now getting back to logistics and intermodal, was there a specific moment, maybe a customer problem, maybe a lane where you looked at intermodal and realized this is misunderstood by a huge portion of the trucking industry?
Actually, it's a little bit different. You would think that would be the story, but that's not the story. So going back to the history of our company, we started in 2003. Well, the way we started the company was our largest customer at the time, PepsiCo. We were at the point, we had 3.1 million square foot of warehousing space. I would say 2/3 of it was associated with PepsiCo. Gatorade, Propel, seriously, during the summertime, when it gets 100 degrees, over the weekend, kids are having, again, at the games, we would have a couple hundred trucks coming up to the doors for that foreseeable week, doing all the replenishments. Their carriers, a lot of times would show up, but several times it would fail. So initially we started off as just being that solution between, their cheaper carrier and then their expedited carrier to try to recover. So we were a freight broker for just regional transportation for them. We really moved into intermodal in 2007 when the company was bought And that company, they wanted to be really in e-commerce. So that type of business really disappeared for us. And they want us to be, well, if you still want to do transportation, they said, well, you're going to have to be self-funded. We're not going to put any money into the business. And so we made a strategic decision at that time saying, okay, what are the challenges that we're going to have to work with? Well, if you're a regional broker, you're going to lose a penny a mile, nickel a mile. They're going to go next door and use somebody else. So we had to figure out what we were going to do. And looking at the transportation world, there's so many brokers out there. There's so many carriers out there. And we were saying, okay, how can we be different? Well, we can be different by being intermodal. And I'm going to simplify the intermodal market a little bit here, but there's essentially 5 players out there that occupy 85% of the market share. You're going against J.B. Hunt, Schneider, Swift. And then you've got, let's call it another 45, 50 people, IMCs like ourselves, that are out there that are, I call us ankle biters, going after the other 15%. In the brokerage and in the carrier side, you've got so many different people you're competing against. At least by going in the intermodal, we knew exactly who we were competing against, and we knew we had a value proposition that we could bring to the table that was a little bit different than the J.B. Hunt. J.B. Hunt is amazing at what they do. They've got awesome pricing. They've got an awesome team. I have a ton of respect for them. The thing is, for them, and again, I kind of draw back on what, working at some of the larger companies like an Ingram Micro or like a General Motors. If you want some more specialized services and you need more oversight, you're probably not going to get that from the largest of companies. They're going to be very good at, turning and burning certain stuff or certain lanes. But in some cases, you need to have an extra hand, let's call it somewhat white glove service, make sure that things are being managed properly at the origin dock and the destination dock for some higher end customers. We sit on the same docks as a JB Hunt in a lot of cases, but there's lanes that JB Hunt, the customer says, I need a little bit something different from this group. Outside of being, JB Hunt rides at BNSF, our West Coast rail relationship is Union Pacific, typically, not always, but typically. We do a lot of BNSF as well. But anyway, so ours came up a little bit differently. It came up because we needed a different model. But as we got into it further and further, I mean, if you've done some of the reading on some of the stuff we have, absolutely, if it's over 750 miles and your Dray is within 50 to 100 miles on either side, then yeah, you need to start looking at intermodal. You're not going to save, the 20% or some of the stuff that you see out there that you're going to save. You're going to save about 8%. But as you move up and you get out to 2,000 miles, 2,500 miles, yeah, you start to save 20 to 30% on those. That's a sale that makes a lot of sense, and particularly in the environment we're in today.
And I want to get into the shipper side here in a minute, but you've written that the wrong lanes, the wrong expectations, and the wrong execution model are what kill intermodal programs, not the mode itself. What are companies misunderstanding most when they try intermodal and walk away frustrated?
Because they look at it as strictly price, and they look at it, the box dimensions are the same as a truck, and so therefore it is exactly like truck. All I need to do is load it and it's going to go. And that's not quite the situation. I like to call it truck-like, meaning it's close to managing trucks. So operationally, it needs to be handled a little bit differently in the docks. If you don't block and brace, you're going to have a shit show when that product shows up at the other dock. And it's because of what they call harmonic vibration is different. The pallets can move horizontally and vertically in the trailer, and you're not going to get that on truckload. So if you don't know how to pack it out, that stuff is going to end up all over. The customer is going to be upset, or the operations people are going to be upset on the other side, and they say, forget it, I'm out. The salespeople said, okay, nice try. You could save me a little bit of money, but in the end, you cost me a bunch of money, or potentially cost me my customer. So the other thing that gets missed is that if it's not managed and you're working with, some IMCs work a little bit differently. If we're not working with somebody that's trying to manage it, and it's basically an open tab on accessorials, which it can be for some, you can get hammered on rates. So then all of a sudden, then they miss that. It's really what gets missed is the education part, because for a new customer to intermodal, they go ahead and say, oh, I'm going to save myself 15%. This is going to be awesome. They don't spend the time learning about the mode and learning what needs to happen. Maybe they line up with the broker And there's nothing wrong with brokers, but in some cases, the broker that they're dealing with, I think we all kind of understand the model in some of the large brokers. They go to colleges, they get some aggressive people that want to make some good commissions, and they don't fully understand the mode. They understand that they're going to sell this mode or sell a cheaper rate to a customer, and they're going to make some additional money. And so that sale process that they have, they miss some of that transaction that needs to be understood when you're pulling up in a 53-foot container versus a 53-foot dry van.
You said something important that I thought is a team that manages that. Like I came from an owner operator company that we set it up. We had a gold mine of opportunity. Of course, that's what everybody says, but that's what we had. The company that we were going to do their containers and stuff for, Intermodal, was with another company. They wasn't keeping up. We had the trucks to keep up with it. But of course, I was green in it, so I had no clue. But corporate was supposed to be handling, keeping up with everything. Well, once you start figuring in, you're dropping your chassis at 3 or 4 or 5 different locations. You've got containers that are like what their problem was. They had containers sitting there for 6 weeks or longer. But then the rail would only give us the new stuff because they were making big money off the ones that had been sitting there because the longer it sits there, the bigger the charge is. Explain how important that a company needs to either a company like you that handles that or they do it internally, because I think that's where a lot of these, owner operator per se type of companies, maybe not the bigger carriers, they don't understand that at all, and how quickly you can get a $500,000 bill or I mean, like we had a about a $400,000 bill within like 8 weeks, and we wasn't even supposed to be a part of it. Then we're in this fight about it. So explain a little bit of that, because I think that's where it gets lost a lot on the agent side of, hey, there's a lot of money that can be gone in a minute.
Yeah, like the example that you're sharing. I mean, you've got a trailer pool or a container pool, say of 15. If it's on the dry van side, you got a trailer pool. It really doesn't matter which one you go ahead and pull out of the pool. You just pull it out, put it to the dock, load it, and let it go. For the rail side, everything is tracked by that container number, and that container, you're allowed X number of free days at a particular location. After those free days, then you're going to start to see charges. And the charges don't necessarily grow arithmetically, they grow exponentially. And so it's super important to make sure that you're playing first in, first out with your equipment as it's moving through, whether it's at a rail yard at the ramp, or it's actually sitting at your customer or at the vendor. You've got to manage that, because if you don't, it doesn't matter if you have 15 and you're moving through 10 every day. You better be getting to those other 5. Otherwise, you're going to be screwed.
Yes, most definite.
Let's get into where you've really made your name reading the freight cycle. A lot of your analysis from what I've read through 25 and 26 is focused on the market tightening despite underlying demand being pretty weak. You called this a supply-driven freight cycle. Is that correct?
That is what I call it, yes.
Yeah. Explain what you mean by that.
What I mean by that is the FMCSA is serious about tightening the regulations. So typically what we see is demand picks up, and as demand picks up, then of course, then capacity gets sucked up by the total supply of drivers out there. And then that supply capacity tightens and rates start to go up. In this particular case, volume for the most part is staying pretty consistent, but rates are going up. So why are they going up? Well, they're going up because the FMCSA is, again, serious about non-domiciled CDLs, chameleon carriers, ELDs. I had no idea that there are thousands of ELDs, and most of them are out there and they're self-certified. So people are cheating. So you were cheating the logs, so let's go to ELDs. Okay, we'll have ELDs, but okay, you can cheat the ELDs. I had no idea there are thousands of these ELD providers out there. And then you've got the CDL schools that are printing off CDL licenses. As they're cracking down, and the crackdown is not like didn't happen like day one, and then all of a sudden, 8, 10, 12% is pulled on the market. This is still happening. It's happening every day. And because of that, the pool of drivers and trucking companies is shrinking. So that capacity is being pulled from the market. It's making it less elastic than what the trucking market has been in the past. So one of the other things I try to hit on as well is that as that's happening, the trucking market is completely different or will be completely different when demand actually starts to hit. So right now we're already seeing rates up between fuel and just the tightening of capacity. We're already seeing rates up 25, 30, 40%. And when demand actually hits, it's going to be a bit tougher. Overall, that's where the supply is being pulled out of the marketplace, and that's how it's being pulled out of the marketplace. I've been doing this for a while. Again, let's go back to the white hair. Well, you mentioned 89, so we're talking 37 years. I've been out here doing stuff like this.
Right.
And I have not seen a supply-driven market. I've always seen the demand-driven markets. And I think based off of that, other people my age or younger, that's all they've ever seen. So when we actually see a demand hit, it's going to be a significantly different market. And it's already a significantly different market today that we're trying to execute against.
There's a phrase that you've used that kind of stuck with me through reading. Truckload signals the turn, intermodal confirms it. Why is intermodal such an important indicator for the freight market? And what is intermodal telling you right now in 26?
What it's telling us right now, so I'll tell you that answer first that I have. So it's telling us right now that the market is confirming what's going on in truckload. So we've been tracking intermodal spot rates since 2010. People say, why do you do that? That makes absolutely zero sense. Intermodal is not a spot market buy. Truckload is a spot market buy. Absolutely. That's why DAT and the other load boards exist. But intermodal, 90+% is typically run via contracts. But the reason we track and have been tracking these rates since 2010 is it gives us an opportunity to see, having been in the market, you guys have been in there a long time. I wish they taught this in college, but when they're trying to teach you supply and demand and moving along the curve and all this other stuff in your econ classes, there isn't a better industry out there to teach you supply and demand than what the trucking industry is. And we started tracking this because, as we know, that if a lane gets tight or it's imbalanced one direction or another, if it's imbalanced that there's not enough capacity, then we know that the rates are going to go up. If there's too much capacity, rates are going down. So we did all this, and we did this back in 2010 to help us price what was going on and give customers a year-round price on intermodal. And as we were doing this, we started to notice and pay attention to the relationship it had within truck. If you're a stats person, the R value is extremely tight in terms of the correlation between truckload and intermodal. And it tightens even further when you look about 8 to 12 weeks out. So there have been lots of articles that we've seen since July 2022 that the freight recession's over, it's over, it's over. And we've been sitting back and saying, no, it's not yet. We've got to wait for a confirmation. And that confirmation is when 8 to 12 weeks later, we start to see the intermodal spot rates start to go up as well. Unless you see that happen within 8 to 12 weeks, it was just a spot hit. And then it's going to go back down again. Because the way things go is truckload, everybody knows truckload. People are going to put it on truck. They feel comfortable with truck. Intermodal still has been and has been for a very long time a price play or a capacity augmentation thing that a lot of the small to medium-sized people use. But the larger companies, they strategically bring in intermodal. But it's when the medium-sized companies and smaller companies really need to find some capacity, and they're not used to playing the intermodal side because a lot of times they can't because they don't have the volumes to be able to pull in an annual intermodal contract. So they start coming into play. And then that's what starts to drive up those rates and confirm that, hey, this wasn't a weather issue. This wasn't, something happened specifically that caused some problems. It wasn't a quarter end type of thing that, or year end type of thing. So we always wait for that confirmation. We received that confirmation at the mid-April. And at this point in time, we continue to see rates go up on the intermodal side.
You talk about data and stuff. I want to go back to probably the worst time the best time and the worst time of trucking during the COVID. How did those numbers look then? Like, was it right in line with what you said just then, or was it even more crazy? Because on our end of trucking, it was great, thought it was going to be forever, and then the next thing you know, it just hit a wall like overnight, or probably during the day. One day it seemed like it hit the wall.
We hit a wall too. The intermodal market certainly did. Yes, absolutely. Truck hit it first. And then it confirmed. In intermodal, it tends to be about 8 to 12 weeks late to the party. And then at the end of the cycle, it tends to be 8 to 12 weeks delayed in terms of actually acknowledging that that cycle's done and over with. So yes, intermodal was crazy during the pandemic. There were a lot of challenges on the service side, and that has been something that's been advertised quite a bit, that, hey, it had some challenges. Well, the truckload market had challenges as well. You couldn't get a capacity that quick. And if you take a look at the intermodal, so take a look at the service side, I think it gets a bad rap because intermodal, you got to put money and you've got to put big investment to improve the lift capacity of the ramp. So I mean, if somebody in the capital committee of, say, BNSF or Union Pacific in 2016 said, hey, you know what? There's going to be a pandemic that's going to hit. And because of that pandemic, we're going to need like $50 million to expand the capacity of these particular places. And yeah, you'd be left out of the market. I mean, he'd be left out of the boardroom. So, with the intermodal market, you do have some time periods that, it takes some time to get the capital approved. It takes some time to go ahead and build out the infrastructure and that for all that additional capacity to be brought into a market. So there is some limiting aspects to that in terms of, the amount of additional capacity you can bring to the market after, a pandemic type situation. Let's hope we don't have those again. But after a pandemic type situation happens, that's a struggle that can happen.
Rick, there are a couple more things that we want to talk about before we close out. Cargo theft, fraud, broker liability with the new Supreme Court ruling. I really want to get your perspective on this because the landscape has changed dramatically. Cargo theft losses are up about 60% year over year. And we're talking strategic theft, meaning fraud driven, not smash and grab, now accounts for roughly a third of all cargo crime. How serious has freight fraud become from where you sit?
Doesn't matter if you're moving intermodal or you're moving truckload. It's a sad state of affairs. I wish we didn't have this situation. It's extraordinarily frustrating. It's things that we didn't see to this level until really the pandemic hit.
Yeah.
A lot of relationships don't exist today other than electronically or via phone. Freight used to be, you're showing up and you had a great relationship. You knew everybody. You had first name. You knew their kids. You knew their family. You knew all kinds of stuff before then.
Yeah, that's what was great about the industry. It's what kept me in it for a long time.
Yeah, absolutely.
Yeah.
That has disappeared to an extent. And because of that, there's a lot of things that, people can go ahead and bad actors have gotten into the industry, and it's extremely frustrating to see this happen. My perspective is I wish we didn't have to worry about it, but we do. And because of it, it's really changed the landscape of how you have to vet carriers, how you vet, all the people that you're trying to work with. And, not only are people trying to impersonate carriers, but they're also impersonating companies. So sometimes I don't know how many calls or emails I get per week. I kind of lose track of them over time, but I mean, there's a lot of people that are just trying to impersonate a company and say, "Hey, I'm the shipper, and I'm the BCO of this product," and essentially all you're doing is trying to help them steal. Is what's happening. I'm glad to see that we're starting to see some work out of Congress and some of these bills that are being introduced and some of these laws being passed to help protect the shipper, help protect the carriers, help protect the brokers. Granted, the ruling that leaves a lot to be desired yet, and there's a lot of things that I think need to be tightened up on what the Supreme Court had to say. I mean, at this point in time, I mean, you've got the safety scores out there, but it's still an interpretation for each individual broker as to what's going on. And is their interpretation that this is a carrier that they should be putting product on, or this is an interpretation that it should not. Now, what I will say is that on intermodal, while it gets the headlines and some of the articles, and you see products spewed all over, say, a ramp, or say there was some articles that came out several years ago about product all spewed out over LA in that area. There's a somewhat of an additional protection in that Dray carriers have to have what's known as the UIIA agreement that puts an additional level of check for everyone that is showing up to those docks. So it's an agreement that is driven by IANA, the Intermodal Association of North America, that they have to sign that allows them to touch the containers and touch the chassis. And in that process, not only agreement, but there's checks on those carriers that are allowed to sign the UIIA agreement. So again, there's an additional layer of protection of those people that are actually showing up. So that takes away some of the fraudulent work that occurs on the 53-foot drive-in side.
Based off what you just said, I'd like your opinion on this part. We are going into, I think, a visibility verification technology phase into the trucking, which I think we should have been in there years ago. I still go back to 9/11. I think this industry should have been a part of the airlines, and everybody should have been vetted at that point. And moved forward, but they didn't. Now with carriers, I'm curious for this. I think carriers a lot of times have dropped the ball. Their requirements might be at a certain point to hire a driver, but they don't do enough to know about that driver. So to me, I think we have to go another step by just verifying carriers. I think we have to verify drivers. And then in second, I think drivers should need to verify themselves to show they're not a bad actor, to try to help that sector because of what's been going on. Because pretty much these drivers and owner operators need to take that initiative into their own hands. Do you see that being something that would be good for the industry, for drivers to take more accountability of their self, I guess, away, or their business, to say, hey, I'm this person, I'm legal, I have all these endorsements, I can do the freight, and not always just trust a carrier, because that's what most of your groups like Highway Carrier 401, they just deal with the carrier themselves, and the story's not always there.
Yeah, the story's not always there. I mean, Highway is considered one of the best ones to help protect brokers and carriers and shippers against fraud, but I know examples where even that product failed them. Would I like to see something in terms of verification of the employees or the guys behind the trucks and women behind the trucks? Absolutely. How that works and the mechanism that works, I'm not sure how that goes. I have some friends in the industry that they've had situations where stuff has been stolen. The person has to supply, the information on the truck that they're in, the container, or I should say the dry van they're bringing. They have to provide their driver's license. They get photographed when they show up at the dock door. They still stole the load. So you've got that situation that happens out there. So how are we going to protect against that? How do we protect these people that operate for, say, a year and a half, and then all of a sudden go on a spree for a week? Because I've seen this happen from people I've talked with. They'll go on a spree for these carriers were great, and they were even a carrier that they used, and all of a sudden, bam, they decide to steal after a year. It's super challenging. And for those that want to get in the trucking industry, so we were talking about this is a supply-driven capacity crunch that's sitting out there. How are we going to bring more drivers back? Because there's going to be a point that we're going to need to get more drivers back and carriers back. Otherwise, we were talking about accessorial charges going up exponentially, not arithmetically. I mean, that's the same thing that's going to go to truckload pricing, because the market is going to be less elastic for the next demand recovery. And so how are we going to bring people in? And that's a challenge, because there's a lot of folks out there, including us, that we won't touch a new carrier unless they've been on the road for at least a year. And I know we're not the only company that's like that. So how are these new owner operators? How are these new smaller carriers, which have been, the predominant place to be able to get capacity within the 53-foot market? How are they going to come to the market? I'm all ears. What do you think, Justin?
Yeah, no, that's a good point, because I know a lot of companies, and this even goes back to the owner operator side of my recruiting days. These drivers, they go to school, they learn how to be what I call a JB Hunt driver. Well, they start seeing the money that these loads they're hauling for JB Hunt. So they just go straight and buy them a truck and get their authority. And then they realize, well, hell, I can't do nothing for 6 months. And then
Right.
they go bankrupt. They don't know the part of, hey, leasing a truck on with the company and using their authority. And I think what you just said goes back to the very beginning of how you enter the trucking. There's no education. There's no education to explain to somebody brand new in the company, or a driver or a new owner operator, like, hey, this is the template, use it, and this will help you grow, because this is one of the few industries that I look at that it doesn't take a lot for you either just to want to quit and give up, or you financially can't do it, because
Yes.
most companies, they run on a shoestring budget, especially the small owner operator, small fleet. One truck goes down, that could be the end of them. And because you don't put the money in for maintenance, or you don't put the money back for maintenance. I mean, it's just yeah, that's good. I've been a very loud speaker for a long time to educate from the beginning. Even you said earlier, like teaching in college, that stuff, they should teach more in the CDL schools than just backing up a truck. And I don't know if they do that very well sometimes.
No, it's super difficult. I was at a event a couple weeks ago, and someone was asking me about the freight industry. They were asking me if my kids were interested in it. One, my kids would never go into it. They've seen what I do. They're not interested in working
Same.
around the clock. And
Well,
as I like to say, you're only as good as your last shipment. And it just seems that last shipment that you had seems to fail right before you go visit. You have a big customer visit. But anyway.
yeah, or right when you go on vacation, it fails.
Yeah, exactly.
Yeah.
So, I mean, trucking, it's a tough business. It doesn't
Mhm.
matter what size you are, but if you're a small provider or a small carrier, goodness, the cash flow that you really have to have kind of an economics major, because as you said, like during the pandemic, you know, volumes went crazy. Everybody thought it was going to last forever. Well, how many
Mhm.
people thought that, okay, there's a lot of people that are out there that are super educated that didn't think it was going to last forever and had been in trucking, and their business has been in business for at least 50 years. They went out of business because they too bought too many trucks.
Mm.
They had challenges with their cash flow. Who knew that, July 2022 until essentially the beginning of this year, you're going to have to figure out how to, go through some super, super thin times. I mean, typically, 18 months, 12 to 18 months, you're going to see a cycle. It'll go up, it'll come back down, you can recover. That's not going to be too bad because you did real well in those 12 to 18 months. But to go that
It's
long,
almost 4 years.
yeah,
Yeah.
we're talking almost 4 years. I mean, that's a brutal industry to be able to have to manage through those types of up and down cycles.
Mm.
Yeah. Yeah. So let's talk about, before we close out, you've talked extensively about labor shortages, fuel volatility, AI's role in supply chains. What do you see looking out over the next 5 to 10 years in our industry?
There's a lot of changes that are going to happen, I feel. Technology always moves faster than what you think it's going to move.
Hmm.
Again, I've been doing this for 37 years, and it's amazing from where we started from to where we are today. I think AI is going to play a big part in terms of, initially people were talking about AI in terms of, analyzing data. I think it's going to really automate a ton of the back office type work and take away a lot of the redundant type of stuff, or that people can get a little bit bored of. But I think autonomous trucks, I mean, where are we going to get these drivers from? Where are we going to be able to find the additional capacity that we're going to need?
Do
We
you
were
think
just
we have
talking,
the infrastructure right now to support autonomous trucks over the next 5 years?
you know what? I think we're going to have to figure it out.
Hmm.
I think shippers are going to figure out that long haul, they're going to really want to use intermodal. I think intermodal is going to move from right now. It's, the mid 2015-ish range. I mean, intermodal is really growing and finding its foot. After the pandemic, it really lost its footing. I think that the healthiest intermodal market is a healthy truckload market. And I don't feel that the truckload market has been extremely healthy with all the additional capacity was in there that took rates down significantly. So I think the shippers are going to figure out that they're going to want to be intermodal for their long haul, because autonomous trucks, electric trucks, all that good stuff, that technology is challenged. If you want to get rates, you want to get capacity to what that's going to be their option. So I think there's just so many different areas that you can start looking at, what's going to change and how is it going to change. The one thing I can say, it's going to change. And
Mm.
as a leader of the company, you need to be out front of that change. You need to be talking with the group and making sure they're not afraid of the change. A lot of folks are afraid of AI. I like the phrase that has been coming out in the last 6 to 8 months. AI is not going to take your job. Someone that knows AI better than you are will take it, though.
Yeah, you've got to know
Yep.
how to prompt it. I mean, it's just like, so
Yep.
we were looking at my wife owns a group fitness and yoga studio, and we were getting tired of doing her payroll. Her staff is getting extensive. I don't want to do it anymore. My wife doesn't want to do it anymore. So I had Claude do it yesterday. Claude
Crazy,
did the
right?
whole thing. I prompted it. I had it make some corrections. And next payroll, all I got to do is say run payroll for me for her gym, and it's done. It's
Good.
amazing. So we don't need to hire that person anymore.
I've done some programming with Claude. Who knew? I could do some serious programming, put some things in place that took away some of the work
Yeah,
that I
it's
did.
incredible.
And some of the things I did in my early days as a financial analyst that would take me a week to be able to pull together. You prompt it properly, you feed it the right stuff. I was able to do an analysis for a couple of our customers. You've got the rail side that will be charging you on a percentage basis, and then the shipper wants to charge you on a per mile basis for fuel. And they've got a whole mix of, volumes and lanes and shorter haul lanes and longer haul lanes. And you're trying to figure out, okay, well, how am I going to make this work and be able to communicate with the customer? That would have taken me probably, 3 to 4 days to try to actually put that through and try to work it all out.
Yeah.
Mm-hmm.
We can work so much faster, so much more
More
efficiently,
efficient.
but
Yeah.
you're right. You have to know how to prompt the
Yeah.
AI.
So getting back to your question, I don't know exactly what's going to change. I just know it is going to change, and you need to be out in the market. You need to get outside of your own four walls and listen to people, and don't just say, "Oh, they're crazy." Read the stuff, listen to podcasts like yours, and keep an open mind to see what's on the horizon, because you just never know. And as part of that, pay attention to what's outside of even the industry itself, and see what's happening in other areas, because a lot of times the biggest innovation comes not from the industry itself. It comes from somebody on the outside that goes ahead and says, hey, that's a way different way of looking at things.
My last question, it's about autonomous trucks. We have this discussion on here all the time. Will there still be a driver, or is the driver going to be sitting back and controlling like 5 to 10 trucks? You think in a like a air traffic controller? Which way do you think it goes?
I don't think the public is going to be super excited all of a sudden see all these trucks moving around, and there's not a person sitting in front of it. So I think it'll be a gradual movement, or even to a point that, maybe on the long haul side of it, when it's sitting on the highway, and then once it gets off on a ramp and you start to do the city driving, maybe a person jumps in the cab at that point and does all the final tuning.
So do you see autonomous impacting the drayage market?
I actually see that impacting the drayage market in a positive way, and that's a tough market to get into. But although a lot of folks in the trucking industry, they'll start there because that's a way that they can get in and get their hours and cut their teeth in trucking. But it's a tough market to make money on that, because they could be sitting at a ramp, whether it's at a port or sitting at an intermodal ramp. One of the challenges for autonomous trucks and electric trucks is the distance they could go. Well, a lot of the drayage, it only functions between 50 to 150 miles. If you start to go further outside that, then it becomes a little bit of a challenge in terms of making intermodal competitive on price against truck. So it's a good fit for that. There's some challenges on weight at this point, but I saw there's a company out there, I can't recall the name of it right now, but it's essentially just a sled, and it's going to help it
I
addresses.
saw this too.
Yep.
I
Yep.
I don't.
Yep.
I want to say it's not Buble or something. I can't remember.
It's something
It's
similar to
something like
that.
that. Yeah,
Uh-huh.
something like that. And because we were talking about autonomous trucks, and I see this company, I'm like, this is genius. But now there are advancements, like you have a company like Kodiak who's doing, I don't know if you've seen, they're doing hundreds of loads out in the Permian Basin. Those companies are like cutting edge, and
Right.
they're going to be put out of business because you're not going to need the truck anymore.
Right.
Yep.
It's like a
It's
skateboard. They're putting it on a skateboard, and
You can run flat.
Yep.
It's essentially a sled with a front end that's basically the computer or the
right.
robot that
Mhm.
controls it, and you can put a flatbed load on there. You can put a container on there. You can put anything you want on there.
Crazy stuff.
Yeah,
It is.
it's incredible. Well, we've been speaking with Rick LaGore with InTek Logistics. Check him out on LinkedIn. Super popular on LinkedIn.
Mhm.
Great following. Rick, we really appreciate you coming on. Why don't you do a quick plug for your company?
Yes. Well, first off, thanks for having me. You guys have a great show out here. Really like to listen to it. I appreciate you taking the opportunity to put me on. In terms of, hey, if any shipper out there that is looking to intermodal, they haven't played an intermodal yet, we're the company to work with because we work on the education process, which we started at the beginning of this conversation. That's the most important part as to moving from, truckload into intermodal space. You need to understand that the operations, you need to understand some of the specifics and of what rail lines work, what lanes. So we'd appreciate the opportunity. 750 miles or more is really where it starts to make sense. So feel free, reach out to me on LinkedIn. We have our own podcast out there, the Intermodal Podcast, or hit us up on InTek Logistics. We have a blog that's out there, and that blog is not rah-rah about InTek. It's really about talking about the industry. So if you have questions about intermodal and where it works, where it doesn't, where the challenges are, you'll find a lot of good information. And hey, maybe it's not us that you're going to work with, but you'll find another intermodal provider.
And what's your website?
InTekLogistics.com.
Awesome. And what's your podcast? What's the name of it?
The Intermodal Podcast. It's on all platforms.
Perfect. Perfect. All right, Justin, you want to close us out and thank our sponsors?
Yes, sir. So yeah, this episode is brought to you by Gray Cross. That's graycross.org. Gray Cross is focusing on supporting trucking families and the people who keep America moving every day. When drivers and trucking families face medical emergencies, financial hardship, loss of income, or unexpected life events, Gray Cross steps in to help provide real assistance and supports during difficult times. And of course, we want to thank our main sponsor, ReadyApp. ReadyApp has helped modernizing the connection between drivers, carriers, and brokers through a verified driver profile, streamline onboarding tools designed specifically for the trucking industry. Go check out the driver passport. You can organize your CDL information, your work history, endorsements, certificates, onboarding documents, tickets, you name it. If it's a viable document, you can stick it in there. And with the click of a button, you can share it to anybody from DOT to onboarders to insurance. And for brokers and carriers, ReadyApp helps reduce paperwork, improve visibility, speed up the onboarding process, and creates a more confident in the hiring process by bringing more structure and verification into the trucking industry because it's so fragmented. Go check that out. It's ready-app.com, and you can download it on Apple and Google.
Perfect. Well said, Justin. All right, Rick. Well, thanks for coming on. We appreciate you taking the time out of your day. And for those drivers who are on the road, please drive safe.
All right.
Rick,
Thank you much.
Thank you, Rick.